Hi, this is Prasheel, and you're listening to the Equity Master Stock Market Wrap Up. In today's edition, I'll be taking you through what moved the markets over the week. So let's jump right in. Neogen Chemicals to raise 1.3 billion rupees through its IPO. Jet Airways shuts down its operations. Wipro announces a buyback plan. And is Tata Motors back in the game again? Let's find out. Before that, a quick look at the broader markets. Global markets fell following cues from Wall Street despite better than expected macro data from China. China's industrial output surged 8.5% in March compared to the year earlier, the fastest pace since July 2014, and well above the forecast of under 6% increase. Data also showed that the Chinese economy grew 6.4% in the first quarter of the calendar year. Back home, Indian indices too ended the week in red. However, they did so after hitting new all-time highs over the week. With the markets out of the way, let's look at the key stories in focus today. In the news from the IPO space, specialty chemicals maker Neogen Chemicals is set to raise 1.3 billion rupees through its IPO opening on 24th April. The IPO consists of a fresh issue aggregating 700 million rupees by the company and an offer for sale of up to 2.9 million shares by promoters Haridas Thakursi Kanani and Beena Haridas Kanani. Neogen Chemicals is one of India's leading manufacturers of bromine-based and lithium-based specialty chemicals. The company had commenced its business operations in 1991 at Mahape in Navi Mumbai, with manufacturing a few bromine compounds and some lithium compounds. As I am speaking right now, Equity Master analysts are meeting the company's management to better understand it and bring our analysis to you. What kind of response this IPO gets remains to be seen. Meanwhile, we'll keep you updated on the developments from this space. Moving on to the biggest story of the week, Jet Airways halted its operations indefinitely on Wednesday night. The carrier flew its last scheduled flight from Amritsar to Mumbai on Wednesday as the debt-ridden company decided to suspend its operations on a temporary basis with no cash to run operations any further. The development comes after lenders led by State Bank of India decided to reject the plea for emergency funds. Interestingly, the development brings a cheer to competitors SpiceJet and Indigo, with SpiceJet announcing the addition of 6 more Boeing 737 NG aircrafts on dry lease. Reportedly, these 6 aircrafts are in addition to the 16 Boeing 737s and 5 Q400s that the airline will soon induct. The total number of planes to be inducted in the immediate future now stands at 27. The airline has applied to the aviation regulator, the DGCA, for a no objection certificate to import these planes. Subject to regulatory approvals, the aircrafts will begin joining SpiceJet's fleet in the next 10 days, according to reports. This will aid the company in filling out the vacuum created by Jet's sudden closure of operations. Note that Jet Airways used to be the frontrunner once. So what went wrong? Well, one of the many reasons was the challenge from the entry of budget carriers. This led to dropping of fares by Jet Airways. Some tickets were even sold below the break-even cost. Then, provincial taxes as much as 30% on jet fuel were added to its expenses. Further, the rise in oil prices was a death blow to their earnings. On a consolidated level, the company has bled into losses in 9 out of 11 last financial years. In other words, it has kept its bottom line in black only in 2 out of the last 11 years. With a large player suspending its operations, it will be interesting to see how the aviation sector in the country copes up with the newly created demand. Moving on, Wipro was in focus over the week as it posted better than expected revenue growth for the fiscal fourth quarter, but offered a disappointing revenue growth outlook of -1% to 1% for the June quarter. The company also announced a bonus of 1 free share for every 3 shares held by shareholders. The board also approved a 105 million rupees buyback plan, under which it will acquire up to 323 million shares at rupees 325 apiece. Wipro's buyback plan is its second in about 15 months and its third since 2016. It had undertaken a 25 billion rupee buyback program in 2016 and another 110 billion rupee buyback program in November-December 2017. Now, speaking of buybacks, the number of buyback offers in FY18 were at an all-time high. Never in the last 2 decades had Indian markets seen 59 companies announcing buyback plans. But what is truly surprising is that unlike in the past, the buybacks this time seem to be skewed in favor of short-term investors rather than long-term ones. At Equity Master, we believe as shareholders in cash-rich companies, you should be wary of expensive buybacks. But if possible, use it to your advantage to rake in some cash. Tata Motors was in focus throughout the week. This was fueled by reports that the auto major is planning to expand its electric vehicles segment in the passenger vehicle space by widening its portfolio. The company will add Altroz EV, a premium hatchback, and H2X, a small SUV, which will be in the league with Tiago and Tigor EV. Over the week, shares of the company hit a fresh 6-month high of 230 rupees on expectation of an improved outlook. Shares of the company have rallied 62% from their February 8, 2019 low of 142 rupees after the company's promoter, Tata Sons, bought shares worth over 5 billion rupees in the company through the open market. Reportedly, between February 11th and February 26th, Tata Sons had purchased 31.7 million shares worth 5.3 billion rupees from the open market. Post-transaction, Tata Sons' holding in Tata Motors increased to 34.4% from 33.6%. Adding to the positive outlook, the company's wholly owned subsidiary, Jaguar Land Rover, said it expects improved financial results for the quarter ended March 2019. JLR is also planning to launch its electrified products in India. It will be interesting to see if Tata Motors is able to script a turnaround from here. Well, that's all from us today. Before signing off, we would like to know if you like our podcast. Is there anything specific you would like us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Happy investing!